Hey everyone, so I'm a full-time Bitcoin trader now, apparently, and I wanted to tell a little bit about Bitcoin. Now don't take this as like, oh, you have to buy Bitcoin, because you know what, I'm selling all my Bitcoin right now, because I think whether you think Bitcoin is going to go up or down depends on the price that it's at right now. Alright, and also on the long-term trends, because you might be going for a year investment, you might be going for a month investment, you might be going for those daily highs and low fluctuations. So you can't just say, oh, I'm a bull, I'm a bear, right? A bull means you're going to charge upwards in price, and a bear means you're going to charge downwards in price. Well, whether the price goes up or down also depends on what the price is at right now. So, anyways, let me explain a little bit of a difference, one of the differences between fiat, which is, you know, Canadian dollars, US dollars, euros, etc., and cryptocurrency, or Bitcoin. So, let's say with my Canadian dollars, I go to the bank and I say, bank, I want to deposit $20 trillion. And the bank says, okay, we'll deposit that money. We'll deposit that cash. It's now on our database as digital currency, and we owe you $20 trillion. So whenever you want, you can come to our branch and you have this bank account number, and we owe you $20 trillion. And then maybe, I don't know, some guy wants to withdraw $800, so the bank prints out $800 and gives it to him, and maybe they run out of printed money. Maybe they run out of printed money 20 times over, and the government says, hey, we have this $1 trillion jet we want to make, or we have this $20 trillion we want to spend on war, and banks like, I mean, we don't really owe you money. You owe us money, government. Well, yeah, we're friends, right? And bank's like, yeah, I got you, buddy. And then bank prints out $20 trillion. The government walks away. Government says, we owe you $20 trillion. The bank, you know, that's okay, because you know what the bank did? Well, in between there, the bank was like, hey, reminiscible, your $20 trillion, we're going to lend out 90% of that back to our BMO friend, or, well, this is more of a Europe thing, but I'm sure it happens in North America. I'm not up to par. So maybe let's say, let's lend to Europe. European bank will lend you 90% of that 20 trillion. That bank says, nice. Well, we'll lend 90% of this to another bank and charge interest, and then that other bank lends 90% of that to a third bank, and then back to the first bank, we're going to lend 90% of that to the first bank. Now, the first bank has almost twice as much money as they started with. They owe me about half of it. But hey, extra money, so that's what they lend to the government. I mean, still not enough. Okay, we'll right. Half of 1 trillion is not 20 trillion. My bad. So they get a few more customers, and they do the lending circle, and then boom! Everybody has more money. Everyone's happy! Everyone has more money! But now that everyone has more money just from borrowing it, there's now more money in circulation. And the people who are actually, you know, shoveling ditches and picking up the garbage and sorting the recycling bins, their money's not worth so much, and so now what used to be a $20 an hour job, well, what used to be a $10 an hour job would now be a $20 an hour job because of inflation. That's where the price of goods go up, because everyone has more money. Everyone can spend, but now the money's worth less. And so the banks can just keep on lending out money and doing the circular lending and just creating money. We owe you! Another bank, we owe you! Third bank, we owe you! And then it just goes back to the first bank, and everyone has more money. All the banks have more money. The governments have more money. People wanting to borrow money, they can get their money. Everyone has money except the guys working at minimum wage, whose wages don't keep up with inflation when the inflation doubles and the minimum wage stays the same. That's a problem for some people, but the banks care? No. Now what happens with Bitcoin is when you send someone money, And then they're like, I owe you... Nope. This is a one-way transaction, bud. Once the money's sent, it's sent. If you want to print out more money, you're going to have to spend a lot of time and energy mining that with algorithms. Because, I mean, what's the quantum computers going to do? Is that going to... What happens if quantum computers are taught to mine Bitcoin? That's actually a problem that I don't think I've researched at all. Interesting question. That would probably push down the price of Bitcoin if suddenly quantum computers could mine it. Interested to hear about that. But, I don't know anything about that right now. But yeah, right now, if computers don't make a major breakthrough, price of Bitcoin gonna stay, I think, between 7,000 and 13,000 Canadian until the next breakthrough in price upward. Because I'm a bull, I believe in the 1 year moving average being an upward trend, not a downward trend for the future. So, yeah, maybe if there's a major breakthrough and the price goes past 13,000 Canadian, then I'll become a bear and think, you know what, I think it's going to go down now. Because there's also inflation and speculation in Bitcoin. But you know what happens? You know what the difference between Bitcoin and fiat currency is? Yeah, one difference is the government supports fiat currency. If the bank owes you money, the government's going to make sure they pay up. But the supply is different. The supply of Bitcoin is low and stable. The supply of fiat, like what happened after World War II, Germany had some loans, they printed out money, everybody got their loans, inflation skyrocketed, and the citizens they were burning wads of cash as stove fuel because the money was worth that little. It was a good bargain to just burn your paper dollar bills because that's how much they were worth, was paper. So, hopefully that doesn't happen again. Hopefully we can transition to renewable energy before fossil fuels run out. Not just for ecological reasons. And petro-agriculture and petrodollar. But, yeah, there is some problems with the economy. And we can solve those all by lending money. Just lending and lending and lending as everybody gets more money. And the price of goods skyrockets with the inflation, and Bitcoin just avoids that. So, yeah. Right now, I think the price of Bitcoin is going to go down. I think it might go down, once it falls to 9,000 Canadian, I'll buy you back in. And if it rises past, 10,700 Canadian, then I'll start selling. And the more it rises, the more I'll sell. Or if it drops below 9,000, the more it drops, the more I'll buy. You can do quadratic, you can do linear. It's basically, that's martingale. I'm gambling with my money because I think I kind of had a grasp of where the support and resistance is for Bitcoin, what prices people are willing to buy it, and what prices people are willing to sell at. And that'll be dependent on what the price actually is, you know. If the price is high, people are more willing to sell. If the price is low, people are more willing to buy. Because it's just like a foreign currency. Not exactly like a foreign currency, but, you know, you can exchange between multiple currencies. You can exchange between fiat and Bitcoin. And you can also exchange between Bitcoin and other cryptocurrencies, which people are interested in. And a lot of banks started investing in cryptocurrency because, you know what, I think it'll save banks a lot of money to use blockchain technology. So whether it's a cryptocurrency or just a bank's blockchain technology, the banks don't have to worry so much about hackers if there's backups, you know? It's not just one mainframe that's vulnerable. You have 20 mainframes that's vulnerable, and if one gets hacked, it has to pass through 10 more before that hacker can get through the system. You know, I don't understand how banks want to implement it, but it's there's definitely weaknesses because you have to protect every node in a blockchain, but you also have to hack through more nodes to actually hack the system. And it's also good for, like, transparency. If you want to cast a ballot, and there's no paper ballot, well, first off, you want a paper ballot so that there can be recounts. You want an exit poll so that there's no, if there's fraud, it gets detected. And you want, maybe blockchain, because, you know, if I cast a vote, I get a little number on a slip. That's a receipt for my vote. I go on the internet, I check the receipt. Oh, it says green. I voted for green. Good. My vote went through. Maybe I had a provisional ballot. I voted green. No vote for green. Okay, it didn't go through. Now I know what happened with my vote. And that's transparency. If my vote for green counts as 2/3 of a vote for liberal and 1/3 of a vote for green, then that's like, what the F, man? That's bad, and then we catch it. So that's the nice thing about blockchain. It allows for transparency. You don't lose security for the transparency. Yeah, you have to secure more than one node, but if the big node goes down, hey man, there's other nodes that have to verify it, so you can't break through the whole system just by hacking one node, even if it is cheaper to stack up the antiviruses and anti-malware systems on that one node. I don't know how people protect against DDoS. There's so many ways to attack computers that we don't even know about, and AI are developing more right now. So yeah, I'm selling my Bitcoin. I think it'll fall, and then I'll buy back it. And the cycle of life and death continues. We shall live, they shall die. That's a Nasus quote.